Well, it's St. Patrick's Day, and if your city's like mine, everybody becomes a Irishman for one day and goes out and, I guess, drinks green beer is the way to do it. Glad those days are behind me. Don't have to worry about that anymore, but it can be a mess in a big city. Never in Chicago. A couple of times I've been up there in business during that. It's just people out into the streets. A couple of times I was up there, it was pretty cold, too. So the piper will be paid if you drink too damn much. That's the way it is. Here we are. Tomorrow's the FOMC. Market's really kind of been on hold today, hard to trade because of that. We came in this morning thinking that we had best resistance at 70 to 75. We said it could be at 65. So this is our sell zone. And it took a long time to get up to the 69 area. In fact, we're just now making it. We had a 55, 57 buy down here, caught the market really well off the low structurally, but it was very, very choppy trading. I mean, the signals were late. You get in these congestion areas and you just get chopped up. We took a trade off this retest failure right here, ended up with a scratch. We said you could have gotten 2 points out of it, and we didn't think it should stick for 3. We took another trade here at this retest failure, paid 2 ticks more for it, ended up scratching that trade. This is a retest failure that we missed, and that turned out to be the trade with the setup that was there to make your money off of. Into this congestion area, same deal. 1, 2, 3, 4. 4 potential scratches. I mean, you could have written it out. You could have made a little, scratched a little on those 4 trades over an hour and a half. Finally, this retest failure kicks in and works and straight up, but not on a lot of volume. Not on a lot of volume. So very, very tough trading, and why tomorrow's FOMC announcement. We talked about early this morning. Everybody's worried about maybe the Fed is going to pull the word patience from the jitters over that, so they sell it down. Well, where are the jitters this afternoon? 50-lot trader, peak selling was on this bar right here, and there wasn't much selling at all when you look at how flatline this thing was. The 50-lot trader was long all the way into it. There is a tendency for the stock market to rally into the FOMC announcement, and a lot of people play that. And I'm sure we saw some of that right here. But the 50-lot trader never abandoned the long side of the market. We were guessing that we were going to close in the 64, 65 area. That may be suspect right now. 50% retracement of the day session. Another retest failure right here. Up here, you'd have to go way back to the night session to get a retest failure out of that. But volume on this bar, less volume on that, and the width of this bar comes from the selling going into the close. Got a weak close, and that gives you a reasonable trade. But again, very, very choppy trading. Not much to get out of it. Tomorrow's news is basically the FOMC. And if they drop the word patient or patience with raising interest rates, this market can sell. Inside day, trading range. So my guess is we'll have just as tough trading tomorrow until the FOMC makes their announcement. Then the news how goes as the announcement is put onto the wires. Will take the market big time to the downside if the word patient is moved. If the word patient is still in there, it can rally, but I doubt if we'll see as much action to the upside as to the downside. So we're looking for a trading range tomorrow. The E-mini on the F2 screen, we've got a D. We've got a seller. Definitely into 75, so selling failure to take out 70, 73 is a pretty easy trade to see for the overnight, and I think that trade has some merit. On the buy side, our first buy is going to be 60 plus or minus, say 60, 62. And then our 55, 57, which is where we were this morning. And the FOMC news is what will take the market whichever way it's going to take it, which you know what the Feds are going to do. You got the trade. Large institutions will sideline themselves into news like this. They're interested in direction only. They trade fundamentals, and they're willing to give up trade location for more fundamental news. And that's why we look at such low volumes on days like today. Okay, looking at the note, we came in this morning seeing a trading range. We got it pretty good. We want to sell 23s to 27s. The high was 22.5. It was a data point that we had for resistance. We had hoped to buy 13s to 17s. I believe the low is 14, 14.5. It is a higher low, higher high. So this one says we're buyers. Looking at the F2 screen, AB. So if they remove the word patient or patience from their statement, this market can sell just like the E-mini. Why? Because interest rates will be raised sooner rather than later. Bear in mind, these were the conditions that the market was facing: deteriorating housing, manufacturing was weakening, the export market was weakening, that led to QE2. So the Fed's really kind of walking a tightrope here. Saxo Bank says they boxed themselves into a corner. They will raise interest rates come June. They've lost control of the markets. Goldman, other banks are saying, be careful, you better not raise interest rates. So we've got split opinions out there, and whatever the Fed's going to do, they're going to do. So coming into the night session, it's a B, maybe a little lower, 9 to 13 by 1. And again, we may have to pay 16s, don't know. And selling 19s to 23s for the overnight session, and 27 to 31 is the way I see it for financials. If you haven't discovered the ZB, I think you need to take a look at it. And the reason for that is learn how to trade with the note. That's the lowest tuition costs, period. But you've got a market that will trade fundamentals, and it does honor support and resistance. And in both the note and the bond, as those who trade it will testify, I mean, you put on a trade because you want to be long or short. You don't head fake anybody. You just put them on and you take on. And that's what, to me, plus the fact that it generally trades fundamentals, makes it a little bit easier to trade, especially for a beginner that likes to know the why behind it. Conversely, if you've accepted the idea or premise that you can never know fundamentals, and sometimes they apply and sometimes they don't apply, then technically trading the E-mini is a solution to that. And I think the E-minis, the real appeal to me to the E-mini is that last hour's worth of trading. The last hour's worth of trading in most markets don't yield much. Last hour of trading in the E-mini can't. So we had a B in the 30-year. We've got a P here, and that's because the knob spread is getting wider. Now, never bet against the yield curve and bond traders. I mean, they know economics, and they're long the knob spread, and they're long financial futures because the economy is weakening. No more, no less. So here we are. We're going to sell failure to take out 16 to 20. And 23 to 27. I just don't, unless the E-mini, I don't think we can get to our second area unless the E-mini just craters this afternoon. It doesn't look like it will. I'd like to buy the 1 to 5 area where we were this morning. And then 25 to 29. But again, we're into news, and if you know the news, please share it with us. Will allow you to put, because they're time prioritized, will allow you to put your orders in first, but you need to share that information with us. Now, if you were a member of the government or our Congress especially, who are exempt from insider trading rules, you could share that information. But if you or I actually had that information and we told somebody about it, we would have exposure to being sent to jail. Isn't that fun? Two sets of rules, double standards. The crooks, it's legal. Doesn't mean it's right, but it is legal, and they don't go to jail for the most part. We do. Okay, 55 to 60 is resistance, 40 to 45 is support. My guess is we're going to hit the news tomorrow right here at 50, so buy ones, 45 give or take, buy twos, 40 give or take. I do like the short side of the market better, no doubt. Sell one's 55, sell two is 60. Well, you can play it both ways. Now, the note over the bond has you subtracting the bond from the note, and I don't do it that way. I hate it because I hate negative numbers. So what I do is I subtract the 10-year from the 30. So if the number is getting bigger, it means the knob spread's expanding. If it's getting smaller, it's contracting. But the true knob spread is taking the 30 from the 10, and I just don't like looking at negative numbers. Note over bond. Yeah, expanding would be bearish for the economy because interest rates are going lower. It's the inverse. Well, you know, on the E-mini, you used to say expanding knob spread would be bearish for the E-mini too, because the economy was weakening, and contracting knob spread would be positive. And the euro. I think you know, one of the things where people keep saying, "Well, gee, my knees, why does money keep coming onshore in the United States?" And if you look at manufacturing with 3D printing right now they are printing turbine blades in jet engines, and with nano, as opposed to casting, with nanoparticles for metals and stuff like that, you're bringing much different properties into fabrication of metals too, and much faster. And if you look at 3D printing, if you look at changing the tax laws, you look at the fact that we're energy efficient, the entrepreneurial talent is still in the United States, the money, all the systems to back it up and get it done. What the world is waiting for is just some sort of help from the government, some change in government policy. So as bad as different administrations screw things up, there's always that realization that the United States is where it can be, given a little bit of help from the government. But this government goes out of its way to look like Europe, and when you look at Europe, the European Union, you know, they're ecstatic if they get a 1% growth rate. Our historical growth rate has been 3%, and growth solves a lot of problems. And the problem, we're not moving houses, and the problem that our economy's not growing is that wages and the standard of living is decreasing in the United States. Why? Because of tax policy and industrial policy. And until that changes, we have the most potential of anybody out there, but we are being restricted, purposely so too. So if we were just to take regulations back to 2008, and if we were to take the tax rate back to where it was in 2008, and if we were to allow onshore, bring back profits that are overseas onshore, they've already been paid taxes on overseas, that money can go back to work in the United States. If we were to allow for the production of uranium, coal, natural gas, and crude on federal lines and private lands. This country could explode. And in Wichita, we have a very big entrepreneurial base. Most of it's restaurant-driven. But there's so much money on the sidelines right here that would love to do something, but they don't put their money in the market because of what's going on in D.C. They do exactly what they have to do to tread water, maintain their current positions. No more. And I don't think that changes for the next couple of years. And last but not least, euro. We're going to hit, like we said, we're probably going to hit the number tomorrow at 106, give or take. There's a buyer, 105.50 to 75. There's a seller, 106.25 to 106.50. And I think that's where we are right now. So 20 to 30, sell 1. 45 to 55, which is where we were this morning for sell 2. On the buy side, 75, buy 1. Buy 2, 50, and that's it for March the 17th, St. Patty's Day, 2015. You all have a great evening. I'll see you bright and early in the morning. And we'll probably be on hold until the Fed speaks tomorrow at 2 o'clock. I'm out of here.